It's Sunday. It's 2:10 right now, 2:10 p.m. I want to go about my business and do other things on a Sunday, but I have a lot of requests about my trading strategies and stuff like that. I believe it's for new traders, but it might help other people as well. Like I try to tell people in my posts and my plays, a lot of my decision making depends on the market because market sentiment is decided in the early morning. So if the futures are up, generally, not always, but generally, that means at least for most of the day, things will be up, and you can trade stocks with high P's or no P's. Or if the market is red, then you want to try to trade stocks like energy, utilities, banks. If the Nasdaq is really red or the futures are all really red, you want to go to dividend stocks like REITs, like banks again, like like the utilities, because generally like those companies that have dividend yields of 7 or 10% normally don't crash. I mean, they can also come down, but they don't normally crash. So what I like to do, let's say on a general day when the Nasdaq is even and the futures are even, not up or not too down, I'd like to trade stocks with fundamentals that trade maybe 20 to 40 or 50 times PE. Like generally, I don't trade stocks that don't make any money unless the market is green and the futures are really high. Why? Because let's say, well, we already know, like we can't control the next day. We don't know what's going to happen. So let's say that you trade a high flyer and you bought it at $20 this high flyer. The next day it might come down to 15. You know, if you're lucky, it can go up to 25. But if you don't have a high flyer, and you bought a stock with fundamentals at 20, and it's a bad day. You know, it's a bad day. It's going to be 19. So it's going to be down 5%. And you could gain that by turning your trade into a swing trade. If you trade those high growth, no PE stocks, if they turn into a swing trade, next thing you know, you're down 50% or 75%. Those kinds of stocks, you have to set a stop loss limit. I haven't set a stop loss limit in years. And last year, the only stock that I lost on, and I do a lot of trades, the only stock I lost on was Tailored Brands, formerly Men's Warehouse, symbol TLRD. When it went into bankruptcy, it has a Q in the end, because normally companies that go in bankruptcy have a Q after the symbol. So I only made one bad trade in 2020 out of a lot of trades. So I bought Tailored at 350 in January. This is before the pandemic. Men's Warehouse. The margins are very, very high on suits. Just look at Stitch. All right, you're not going to be mad at me. I'm not going to lose followers by mentioning Stitch, because Stitch, the stock has been on fire. I'm not even going to talk about the stock, but the margins are high on suits and the high-end clothing. So Men's Warehouse, Tailored Brands was $7, $6, and they were executing. So when I saw it at 350, and even when I bought it at 350, I was up 10 cents right away and a lot of shares. So I was up minutes later, $1,000 because I bought 10,000 shares. I don't want to say that, but I bought 10,000 shares at 350. I was up $1,000 in a couple of minutes, and I was trying to get 20 cents to be up $2,000, and I ended up selling for 25 cents. So more of the story is, like, if the company, so the pandemic happened, the stores are closed, so eventually announced bankruptcy. But when a company has fundamentals, you're okay with swing trading it if you have to. If the company has no fundamentals, you must set a stop loss limit, so something like that doesn't happen. Now, Men's Warehouse did have fundamentals, but COVID-19 happened and the store closure. So bankruptcy was Unfortunately for me, it happened. But I mean, there's a lot of other investors. So generally, what I like to do when the market's not so good, and right now we're in a correction, the Nasdaq is in a correction. Like on Monday, Tuesday, and Wednesday, depending on what happens in the early morning, I might try to trade those super defensive stocks, which are high dividend payers. And because those stocks, no matter what stock you pick, and my watch list for dividend stocks has about 50 plays. They all pay high dividends, all 50 of them. If the market is down, those stocks, they might be down, but actually most of them are going to be up because people that have been trading a long time pivot. They get defensive. So right now, the NASDAQ is down 10%, but the Dow and the S&P are near all-time highs. Why? Because investors traded out of high-tech growth and got into value, into high dividend, into banks, into energy, into utilities. So the bad thing for you to do was buy on the dips all the tech stocks. Now, I'm not going to name the names of anyone. If you read my post, you can already read them. But once again, on YouTube, I'm trying to get followers, not lose followers. But this one person that's very, very famous was buying a stock on dips at I think 28. Then buying the dips at 26. Then buying the dips at 24. Then buying more dips at 23. And right now, let me see what it's at. And I like the stock. I mean, the company is growing at 40%. But one thing to know is that the company is growing at 40%, not making real money. They're making some money, but they're not making real money yet. So if a company's not really making real money yet, it doesn't make sense to buy in the dips because who knows when this correction is over. So right now the stock is $22.50. So this individual was buying in the dips 28, 26, 25, 24, 23, and now it's $22.50. So what does that mean? So maybe the stock goes back up. I'm not saying that the stock won't go back up. Maybe it goes back up. But how about you went defensive and you bought those dividend stocks, energy, utilities that were going all-time highs. So you make money, you buy those stocks for those 3 weeks, and they all go up and make new all-time highs. You make money. Then now the stock that is down from 30 to 22, you buy maybe at 23. So what? You missed a dollar. You missed a dollar. You didn't time the perfect low, which no one, I don't care what chart you use. I don't care if you have direct line to Cleo, the psychic, Cleo, Miss Cleo. I don't care if you have her number, a direct line, she tells you no one times the absolute bottom. So what I'm trying to say, the better strategy, because people ask me about strategy, is going defensive. Defensive might be pharmacy, stuff like that, but when things hit the fan, go super defensive. Defensive is like 90%. You know, you do insurance, you do pharmacy, you do foods, supermarkets, that's somewhat defensive. And then super defensive is the REITs, the banks. The ones that pay high dividends because they won't crash and they're likely to make new highs or come close to new highs. So you immediately jump into those stocks and then you buy tech when the coast is clear. When the coast is clear. So what if you have to pay $1 or $2 more? So what if if the tech stock that was 300 dipped to 170 or 200 and you didn't buy the dip? And then now it's 200, and you're telling yourself, why not buy it at 170? So what if you even had to pay 200? In the meantime, those 3 weeks that you missed $30, which was 15%, you missed the 15%. In the 3 weeks, you made more than 15% by trading something else, and then you go back into the tech stock. So this is a strategy. You know, we're already at 10 minutes. I'm not trying to kill everybody here. But my strategy depends on the day, on the market open. You know, are we green? Are we red? If we're green, I can go into a little bit more growth, a little bit more tech, and it's okay. I'm likely to do well. If we are red, do not buy the growth and tech. Chances are, do not go against the market like on my other videos, okay? I don't care if you're me. I don't care if you're a big time money manager. I don't even care if you're worth $1 billion or $2 million or Chama. You know what? I'm not a big fan of Chamath. And if I lose fans on YouTube because I'm saying something about Chamath, listen, this guy is worth billions, whatever. He's worth billions, but even if he buys and dips, like actually he was selling SPSCE space. So you guys, whoever have it, have more faith in him because he has 0 shares of the stock. So he sold it at 35, 38. Is he buying the dip? He is not buying the dip. He's pivoting out and getting defensive stock. But what I'm trying to say is even if you're a billionaire, and you choose to buy the dips or tell people to buy the dips, you are not the market. Maybe for one day you can come out on CNBC or come out on Bloomberg and say you're going to buy the dips and you're going full on in whatever stock like SPCE, and maybe the stock goes up a little bit because you're a billionaire and you have power, or you can tweet and everyone listens. But that's for the day. In another few days, the stock is going right back down. So the point of that is, don't decide that you are the market. Look at what the market is telling you, and pivot. Make plays based on what is happening in the market. Don't decide that you are going to beat the market. You are not going to beat the market. If you time the dip perfectly, congratulations. Do that 20, 30. You know what? Do it 10 times. If you were 10 out of 10 and you bought the disc perfectly, you don't need me. You don't need YouTube. You time the tech stocks perfectly on the dip and you sold near the highs. You don't need anyone to tell you anything. You are already a millionaire. But for the regular people that aren't as gifted as you, that times the perfect bottom, times the perfect top, my strategy is I look at the market. The market tells me what to do around 7 o'clock. Around 8 o'clock, 8:30, I already have a plan. I have 5 to 10 plays. Right now, lately, I have about 15 plays on my list of plays that I like to trade that I'm watching. And for the last few days, it's been dividend stocks. I don't think I'm going to lose any followers. So Prospect Capital, symbol PSEC. Apollo Investments, AINV. Like these are stocks that give very high dividends and they move unfortunately 10 to